understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time. Hey everybody, welcome to another episode of the Tech Behind FinTech. I'm your host, Nnamdi Osuagwu. You're joining here on another day. Pretty excited to be here as usual. Was off last week, celebrating the Thanksgiving holidays in the U.S. And we are back today. Hope you loved our little intro. Pretty excited about that. All right, let me get organized real quick. Some housekeeping stuff done. All right, as always, comments are always welcome. If you have insight to share, you want to add to the discussion, ask a question, please go for it. Let's set things off. So today's topic, right, we're going to cover the news of the day, but one thing we found interesting, we're going to go over the story of two challenger banks, Greenwood Bank and GloriFi. Before that, we're going to cover some topics of the two articles we're going to cover, and then we're going to jump into that and go into the history of what a challenger bank is and so forth. So that's our main topic of the day. So we're going to start organizing our show moving forward. The solo shows, we'll have the news first, quick updates. Then we'll go into the main topic of the day or the research you want to come forward with. On shows where we have guests, similar format, news, and then the main topic with the guest. Right now, we are live from a few places. We're live from LinkedIn, Facebook, YouTube, and Twitch. We also have a separate stream going on Instagram. To my Instagram people, thank you very much for joining. Appreciate it. If you want to see, during the show, we usually present PowerPoint and different slide decks. You're not going to see that on Instagram. If you want to see that, go to the techbehindfintech.com and you'll see that there. All right, without further ado, let's hop into the news of the day. Also, feel free also for comments. You can comment on Instagram, but I won't be able to post your comment to the video. So if you want your comment included in the video, comment on Facebook, LinkedIn, YouTube, or Twitch. The links are all on Tech Behind FinTech, and you can watch it live from the website. Cool. With that being said, let's jump into it. All right. The first thing I want to talk about, the latest on some technology layoffs. Let me widen the screen. All right. So what do we have here? So I'll go to this one website. I think it's, I'll get the website for you, but it basically shows a week by week of what's happening within the field, the different firms doing layoffs and things of that nature. So some of the more recognizable names, we have Bloom Tech. It's a technology company and education vertical. They're laid off 50% of their staff as of 12/1. Next is DoorDash. A lot of people know DoorDash. They just laid off 6% of their staff, 11/30. That's 1,250 people. Kraken, it's a cryptocurrency exchange, laid off 30% of their workforce, 1,100 count. Another Happy Money, it's a finance platform, fintech platform, 158 employees, 34% of their workforce. Going to go down the list. Pinterest, I don't have an exact number, but they just did a layoff, so on 11/30. We know that's pretty more of a familiar name. The rest are not as familiar. I'm not sure. Bitso, it's a cryptocurrency company out in Mexico City. Bitfront, 100% of their staff. So I think they might have closed down. Cryptocurrency company. What else? Plurk, Guadalajara, 40% of their workforce. Hyrect is a recruiting firm, 40% of their workforce is 200. So it's the latest on that. All right, let's move on. Next article that we came across, FIS. So FIS stands for Fidelity National Information Services. There's an American multinational corporation known for its development of fintech. Um, and as of Q2 2020, it offers solutions in three primary segments: merchant solutions, banking solutions, and capital market solutions. So they're planning to cut thousands of jobs under the incoming CEO, Stephanie Ferris. The strategy of the firm is to get its share price over its 2022 numbers. Right now, it's in a slump. The cost-cutting savings plan is at 500 million. They're trying to save. So that's what's going on. They became the largest processing and payments company in the world after acquiring WorldPay for 35 billion in 2019. So that's what's going on there. All right, let's so it hasn't happened yet, but it's about to. That's what their plan. Their goal is to save 500 million. So here's some stats on FIS. FIS facilitates the movement of roughly 9 trillion through the processing of approximately 75 billion transactions in service of more than 20,000 clients around the globe. So they're a massive company. Okay. All right. That said, let's get into the topic of the day, which we're going to go over challenger banks. I don't know if anyone knows what a challenger bank is, but it's a term that we hear a lot. So let's go over I'm going to start by going over the history of challenger bank, and then we'll get into these two banks. So challenger banks are basically digital first banks with a banking license. So a couple of interesting points to mention. I have a deck on from some website that kind of describes a challenger bank. So there's a term called neobank and challenger banks, where a challenger bank could be considered a neobank, but not all neobanks can be considered challenger banks. I think the difference is to be a challenger bank, you have to have a banking license, and not all neobanks seem to have that. So they're mature challenger banks. They're it's a relatively new. Challenger banks have been around for quite a while. So some challenger banks already have a maturity, have become mainstream in the market. Newer challenger banks, they're literally less than 3 years old. There's Sharia challenger banks, which I would love to do a show on next summer. I really want to get into it. But Sharia banks are banks that follow the rules and regulations of Islamic finance. So one of the companies is Risk, is an example of a Sharia challenger bank. That is definitely a show I want to do. I want to learn more about that, because I know cannot get interest under Sharia law when you're dealing with that. So I would like to dive into that in a future episode. All right, let's second. Let's get into all right, so that's what a challenger bank is. Digital first bank. You want to see a branch. It's all through a mobile app and so forth. So found a couple of things interesting. So in researching the show, two banks came up with recent news. The first was GloriFi. It's a bank. It's a challenger bank. Started earlier last year. Their app went live in September. They were going to go public, and now they are shut down. We're going to go into why. Well, we're going to go into what we know. I don't know the direct details of it, but I'm going to go over what was reported. And next is Greenwood Bank. They just received a second round of funding. It seems to be going extremely well. And it's just interesting, right? You have both banks. I mean, the one thing with these challenger banks that they do is you can get real niche and target a particular demographic or of people. So, you look at like the history of challenger banks. There's banks targeting, different causes, different groups of people, or different types of users. But the whole the idea, I guess, when you start thinking about it, you look at the incumbents. When you say the incumbents, like the investment banks, the bigger banks of the world, like the J.P. Morgans, the Bank of America, where it's for everybody, right? You go there, but these banks they've been able to get a real niche in their targeting. So I just found the parallels between these banks, who they target, and what has happened to both in recent news, extremely interesting. So I just wanted to use them as examples while going over the history of challenger banks and talking about it on the show. So some of this, and also some of this stuff for me too is a learning exercise. I like to get deeper into it. So this show gives me an opportunity to research these things and bring it to you. All right, so let's talk about GloriFi. GloriFi started founder Toby Neil Neubauer. I'm butchering his name. I'm totally butchering his name. My bad. Neubauer. He's the founder and CEO of GloriFi Bank. Well, was, because he stepped down recently. Let's read some quotes here. He started a bank last year in 2021. That's when they had the idea for the bank. Hold on, let me just mute that real quick. So let's get a quote. He says, "We believe that this is a vastly underserved market, and are combining unapologetically pro-America values with what we believe is the best-in-class technology provides GloriFi with a powerful competitive advantage to lead this exciting growth category." So their particular segment of conservative, they conservative market, that's who they were. That's who they were targeting. Unapologetically pro-America, pro-freedom, pro-capitalism technology company. That's what they describe themselves as. Another quote: "We didn't create the movement. 100 million Americans who want to be free to express their love of God and country did," said Toby Neubauer, a GloriFi founder. "We created the marketplace where hardworking, freedom-loving people can enjoy big tech without having to sacrifice their values." He's an entrepreneur, investor, and business executive committed to the company's mission of empowering Americans to take control of their financial future. "We believe that GloriFi is a necessary alternative to safeguard financial freedom and independence in a culture where many in corporate America prioritize telling Americans how to live over serving the needs of their customers. GloriFi welcomes all, providing a path to true financial freedom. As Americans continue to struggle under historic inflation, GloriFi provides crucial financial insight while prioritizing data privacy. The company safeguards members' information, allowing members to retain control of their own data." So currently, like I said, they are no longer, they're currently shut down. This is a screenshot from their website in which they're directing customers on, the process and account holders and so forth. But it's just literally less than a year old. Let's go over this timeline, which I found very interesting. So, and we'll go over, before we go over the timeline, let's go over some of their backers. Give me a second, let me find that. Peter Thiel is one of their backers. Vivek Ramaswamy, author of Woke Incorporated, and Georgia's former Republican Senator Kelly Loeffler, former Vice President Mike Pence, Nick Ayers, and Candace Owens. Those are some of the names that come up. He actually raised quite a few million. They say that CEO, he put 10,000 of his own money and drew tens of millions of dollars from big name investors. So very interesting. All right, so let's go over the timeline real quick. So as of July 25th, 2022, GloriFi agrees to go public with a SPAC, Special Purpose Acquisition Company deal, which values the right-wing fintech firm at $1.7 billion. So that's what companies do. So these private companies, instead of going through all of the different hurdles that are needed to go public, they align themselves with a SPAC to kind of fast track that process. So that happened on July 25th. So all this is like really, really recent, right? September 20th, GloriFi FinTech, they launched their app. They provided Texas-based Transpecos Bank's debuts on the Apple Store. And then October 10th, a Wall Street. So I think this is what happened. So this is all new. So September 20th, they launched their app. October 10th, a Wall Street Journal article sheds light on GloriFi's troubles, including launch delays over regulatory hiccups, mass layoffs, glitchy tech misses, and how the company burnt through investor money so quickly it ended up on the verge of bankruptcy. Details include founder and CEO Toby Neuerbauer's 16,000 square feet Dallas home doubling as GloriFi's office, with staffers exposed to his volatile behavior and excessive drinking. An impractical plan to make credit cards out of shell casings, which would interfere with security chips and potentially be too thick for payment terminals, and a potential homeowners policy that would award discounts to gun owners. After the article, October 17th, the CEO stepped down after the Wall Street Journal expose. November 21st, GloriFi announces it's winding down operations. So talk about everything happening so quick. But yeah, I just find the whole thing really interesting. Like and then we're going to go over Greenwood Bank now, right? And it's just the idea of, first of all, it's phenomenal because there's a whole history on challenger banks. They started in the UK back in 2008, 2009 during the financial crisis. Prior to it, it was like, I think they called them the big four banks in the UK. But after the crisis, let me have some notes here. Let me read from my notes real quick. In the wake of the 2008 financial crisis, it was decided to open the market up to new banks. After a period of consultation, the regulation to enable this formed part of the Financial Services Act of 2012, which came into force April 1st, 2013. So yeah, that's a lot of these challenger banks started there, because prior to that in the UK market, they were called the big four, with like big massive banks with virtually no competition at all. And now we see the rise of the challenger banks and fintechs offering these services to niche markets. So that was one, right? In terms of the story, relatively recent, right? So it started last year, or the concept last year, launched off this year, almost went public. Wall Street Journal expose happened, detailing some literally wild stuff going on. I get being a startup and maybe, having your home as your business office, but the drinking and volatile behavior. 7 days later, he steps down. The next following month, the company shuts down. So interesting timeline and story on this particular challenger bank. Now, let's go to this next one. Great question. So let me question from LinkedIn user. By the way, I see only LinkedIn user. Let me know your name so I can address you properly. How did GloriFi burn through all that money? Who knows? I would love to know how they did that. But if we just look at the timeline and what was exposed in the Wall Street Journal article, right? The guys, volatile behavior, drinking on the job. It's a lot of stuff going on. So and it's interesting. What I find really interesting. I mean, obviously, we've been talking about FTX for the last few weeks. That's been on the news, and a lot of crypto companies get a lot of flack. I mean, as they should. Like, look, what FTX did is no one's. I'm not excusing that. That's wild behavior, commingling funds, transferring stuff. It's nuts. But that's not to say it cannot happen well, this is not traditional banking, but this is more fintech outside of crypto. So, in this case, though, right now they have instructions for how people that had money in the bank can get their money, but they definitely burned through investors' cash. So it's crazy. Definitely crazy. But it happens both in crypto and outside of crypto. CB posted join. What's up, CB? What's up, Kevin? People joining on Instagram. All right. So the next one now, if we look at that challenger bank, let's look at Greenwood Bank. So Greenwood Bank on their website, modern banking for the culture, digital mobile bank experience made for Black and Latino customers. So let's kind of get some information on that real quick. Greenwood's mission is to support financial freedom for minorities through community building, career advancement, and financial services. Greenwood's flagship product is a best-in-class digital banking service provided through partnerships with FDIC-insured banks. So Greenwood started in 2020, October 2020. The company had 500,000 prospective members by January of the following year. Originally scheduled to open in 2021, the bank services were delayed due to unexpected high demand. Good problem. And then at the end of the year, then general public access in 2022. The company offers its debit card and banking services through a partnership with Coastal Bank. So they aligned themselves with a bigger bank. Coastal is a huge community bank. So that's how usually some of these challenger banks go. So these are the founders of Coastal Bank. I'm gonna butcher these names. Andrew Young, he was the former mayor, Atlanta mayor and U.S. congressman. Rapper Killer Mike out of Atlanta, activist, rapper, businessman, songwriter, also known as Killer Mike, founded the Grind Time Official Records and started Bank Black movement that encourages African-American families, businesses, and allies to utilize Black-owned banks. Ryan Glover, he's the founder and chairman, has 20 years of experience in delivering products focused on African-American communities. 2011, he started Bounce TV, the first African-American nationwide broadcast network. He also founded New Time Records, a label responsible for more than a dozen Billboard #1 hits. All right, let's go on to some other stuff. So funding. So it's on 4 rounds of funding. They raised a total of $88 million recently. That's why this news article came out. They just raised it around $45 million. Prior to that, it was $40 million. Then they, their latest funding raise was November 29th. So it was this week for $45 million. Prior to that, it was 40. Then they did a seed round for I think $1 million or so. These are some of their investors: City Ventures, Truist Ventures, Pendulum Holdings. Pendulum seems to be a lead investor. George Kaiser Family Foundation, PNC, Bank of America, Wells Fargo Company. So quite a huge number of names. They just made the Greenwood named Fast Company's second annual list of brands that matter. In recognition, the program honors companies and nonprofits providing people compelling reasons to care about them and offering inspiration to others to buy in. These are some of the stuff from their blog. Buy now, overpay later. I like it. Travel wisely with style. Finance talks to have with your family during the holidays. The insecure businesswoman's guides to getting kudos. The importance of black dollar. How to grow your income to beat inflation of 2022. So the topics that they're talking about are geared towards the demographic that they are targeting. Interesting there. Hold up. Let's see if I get some more insight from them. Invest in yourself, not fees. So hold on, let's look at some of their features. Invest in yourself, not fees. No overdraft penalties, no in-network ATM fees, no minimum balance fees, no peer-to-peer transfer fees, no monthly fees. Send money to anyone with peer-to-peer transfers, funds to friends and family, just a few taps through our mobile app. So it looks like they're really forming around community. So if multiple people bank there, you could transfer, but they also say you could do transfers outside of Greenwood. Your wealth grows your community's wealth. We understand that people in their communities thrive when their money stays with them. That's why we made it easy to manage your money online. Interesting stuff. All right, so let's go on. So most would not know, but so the whole Greenwood Bank, their name comes from the Tulsa massacre in 1921. It was in the neighborhood of Greenwood, so I think that's where their name derives from. Another quote from them: "Our vision is to make Greenwood the premier destination for Black and Latino wealth creation and regeneration, while keeping community connection and collective professional advancement at the center," says Ryan Glover, chairman and CEO of Greenwood. And it's interesting. So, based on it, I went as part of this research. I'm like, let me try to see if I can open up an account. So it says, congratulations, I'm 767,618 on the list. My spot is reserved. So, I guess it's got a good problem. Like, they have a massive amount of people on their wait list, as we can see. I'm in the 767,000 area. It's not launched, but it's 88 million. Seems to be growing strong. I mean, it makes sense why the rounds keep going, because it's a lot of demand. And let me just do something real quick. I'll put my referral link that I got there as part of this video. If you're interested in getting on their wait list, I would encourage you to use my referral link, Greenwood Bank, because friends help friends. That's why. Let me add it to the show. So if you put that code in, that's the referral link if you're going to join. And I told you learned it from this show. I would encourage you to use that referral link. So, just an interesting observation. More so, why this show was going to be a news of the week show. As you guys familiar, we do that constantly. News of the week. We're going to start transitioning from news of the week to kind of directed topics. And because both of these banks were both in the news recently, one for getting their Series B completed, another for shutting down, and they're both challenger banks, both targeting different demos, real niche in what they're targeting. Both been around. Greenwood started 2020 in terms of getting people to sign up on a waiting list. GloriFi, as they said, conceptually started last year, started to ramp up with funding and stuff more so this year, had plans to go public. That fell, I don't, maybe that was ongoing. I'm not sure exactly why the SPAC deal didn't happen. I'm not sure if the SPAC deal didn't happen due to the Wall Street Journal expose that later caused the CEO to resign, or something was wrong with the SPAC deal. But they said behind the scenes, there was massive layoffs, that the money from VCs and investors were being burned through, and it close to bankruptcy. So the details of that Wasn't able to find that out. Just like you, just based on what the news. But I wanted to focus the show just on the idea of the creation of a challenger bank and how it's niched, and how both banks who started under, within 2 years, the trajectory of both of them. Found it really interesting. So I just wanted to bring it to you and talk about it. That's what we do on the show. If it's related to FinTech and technology, on the business side or technology side, we have the conversation. That concludes the show for today. If you have any questions, I'll stay on, because sometimes I drop off and someone mentions something and then I don't catch it. So I'm going to stay on for like a second, and then we can. All right, I think that's it for today's show. As always, I really thank you guys for joining in. It's always a pleasure to be on the show, and once again, thanks for all the encouragement. Thanks for watching. Thanks for you guys on Instagram. Thanks for everyone on LinkedIn, Facebook, YouTube, whether you watch it now, whether you watch it a week. So funny, a friend of mine, a colleague, was like, we did a show on the FTX issue. He's like, was that a good one? It's like, dude, I'm kind of biased. He's like, yeah, so I'll catch it on the rerun. I say, yeah, no problem, man. Thanks for the support. Appreciate it. So that concludes today's show. Looking forward to, our upcoming weeks, future guests, and so forth, making a lot of changes to the format of the show that you guys will see as we do it. And we're here to stay. So with that, I wish everyone a great day and have a wonderful weekend. Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.